Okay, we have already started the webinar. Good day, ladies and gentlemen. Welcome to the sixth session of FNA's CBDC broadcast. We're happy you are joining us today. I'm Carlos Leon, and I'm your host in this series of CBDC broadcasts. We're going to give some more minutes for the audience to log in and join the webinar. In the meantime, let me start the housekeeping. This CBDC broadcast follows a 60-minute format in which our guests will provide expert insight into the latest developments and innovations influencing the discussions and implementations of CBDC today. Please remember you can use the Q&A widget below to ask questions. Speakers will aim to answer as many as they can during the 10-minute Q&A part at the end of the broadcast. Please do not forget chat house rules apply in this seminar. First, let me introduce FNA. FNA is a leader in advanced network analytics and simulation. FNA software is used to uncover hidden connections and anomalies in large, complex datasets, to predict the impact of stress events, and to optimally configure financial systems and infrastructures. FNA is trusted by the world's largest central banks, government authorities, commercial banks, and financial infrastructures. About CBDC, FNA has developed a simulation solution that is at the forefront of innovation. Our solution enables users to rapidly test, model, and simulate the economic and financial stability implications of introducing a CBDC or other forms of retail digital currencies. The main benefits are being able to test different design choices, understanding CBDC adoption outcomes related to disintermediation, financial inclusion, and payment behavior, being able to simulate shocks and stresses into the system, and obviously improving decision-making. So today we have the theme, or the topic of our webinar today is the past, present, future of central banks and private money. So to introduce this, let me tell you that as of June 2022, 7 countries have now fully launched or piloted CBDCs, with the Bahamas being the first nation to reach wide distribution of a CBDC. With most of the remaining countries at research or proof of concept stages, everyone in the digital currency space is looking for experience about how, when, and why rolling out a CBDC makes sense. And obviously looking for some answers regarding how CBDCs may reshape the future of money. And that last part is precisely what we are here for today. Today, we will have 2 expert speakers that join us to look at evidence regarding how CBDCs are and may be shaping the present and future of money. So let me introduce your speakers today. First, we have John Kiff. John Kiff is Managing Director of the CBDC think tank. From 2005 to 2021, John Kiff was a senior financial sector expert at the International Monetary Fund. Before that, John was at the Bank of Canada for 25 years, where he spent most of his time managing the funding and investment of the government's foreign exchange reserves. At the IMF, John was part of the team that produced the semi-annual Global Financial Stability Report. More recently, he has focused on fintech issues and CBDCs. Our second guest is Harish Natarajan, lead financial sector specialist on payments and market infrastructures at the World Bank. Harish is the lead financial sector specialist on payments and market infrastructures in the World Bank's Finance, Competitiveness, and Innovation Global Practice. He is a core member of the cross-sectional teams at the World Bank, working on Universal Financial Access 2020, ID for Development, Government Payments, Digital Economy, and FinTech. Harish represents the World Bank in the working groups of the Committee on Payment Market Infrastructures and FinTech-related working groups at the Financial Stability Board. So both of you, John and Harish, thank you very much for joining us today and for sharing your experience and your knowledge about CBDCs. Before we start, is there anything you want to say to add to your presentation?
Well, I'll jump in there and just say I'm very thankful for this opportunity to share my CBDC thoughts with the audience here. And also, it's Harish and I go back a long way. We've been in some of those financial stability board meetings together, so it's a great opportunity to do some riffing with Harish, which I'm looking forward to.
Thank you, Carlos, and the FNA team for the opportunity, and John, likewise, looking forward to the interaction, and good to be back together again. I just wanted to add one standard disclaimer. I'm a World Bank staff, but the views I represent in this meeting are in a personal capacity and do not reflect the views of the bank or the board of executive directors. Thank you.
That's great. Thank you both of you once again for being here. So let's start with the questions. The first one is aimed at John. With over 40 years working in the Central Bank of Canada and the IMF, now you're the managing director of the CBDC think tank, but you're also a very well-known blogger on kiffmeister.com. That's like a blog that everyone working on CBDC or wanting to know a lot more about CBDC should join, because it's a daily, very complete thing. Our first question is, how do you do it? Because I mean, I'm sure you do a lot of things, but you're able to still to have this blog every day updated with the latest news about this. I mean, how do you do such a thing?
Well, first of all, what you'd introduced me as John Kiff, but most of the world knows me as the Kiffmeister. It's a funny pen name that I picked up when I was on the Bank of Canada working on their trading desk. Everyone had a handle, so Kiffmeister is a name I picked up, and I love it a lot. But yeah, I started the blog. I've lost track of when, but I think it really started maybe about 10 or 15 years ago. I mean, initially, before the world of fintech, I was focused more on OTC derivatives and securitization, so I was blogging about that. Then when fintech came along, I kind of morphed, my world morphed into the fintech-focused world, and CBDCs came to dominate my life in about 2017 or so. But I've always been a strong believer in kind of crowdsourcing my work and interacting with people who are interested in the same topic. So I launched the blogs some time ago, like I said, but it really picked up since the advent of digital currencies. And I have this fantastic network of sources, and it really truly is like a crowdsourcing project. And so I get a lot of my information directly from the people who follow me on LinkedIn and Twitter. I subscribe to a lot of different blogs. I mean, to me, the magic pill here is it's RSS feeds, right? Real simple syndication, I think it's called, where I basically can monitor a lot of key websites on a continuous basis. I'll immediately know when something new is happening. But I think the real magic sauce, though, really is the network. I mean, the people, probably some of them on this podcast right now would be some of my best buddies out there to keep it going. But it is, the pace is truly frantic. Like you say, it's every day, and some days I actually have to kind of do a triage. Like, I've got 10 things I could report, and I'm not gonna try to jam all that down people's throats, so I sort of park it and then send it out the next day. But it's really truly a kind of community project in which I'm kind of the organizer.
Thank you, John, for this. It's very interesting to see how you manage that, because I always had that question every day that I received the notification from the blog. I always wonder, I mean, it's Sunday, it's holiday, it doesn't matter, it's always there. So after this, thank you, John, for this. I would like to start with the questions, and I would like to have the first one for Harish, and John will second that question as well. This question is about the evolution of money. And we know that the evolution of money has taken us from private forms of money to the prevailing fiat monetary system, that consists of a government issued currency that isn't backed by a commodity such as gold or silver. Are CBDCs the natural evolution of this centralized government-based monetary system? Harish, what do you think?
Thank you. Thank you for the question. Let me also congratulate John and thank him for keeping up and keeping us all updated. And John, please do continue the effort. I think regarding the question, so clearly money has evolved over the course of history. You picked a particular part of the history, but of course there's a lot of things going back beyond that. And I think one thing to note is money and payments in general has evolved to reflect the state of technology, the desires of the society, and that also the desires of society as expressed in law, and the need for economic interactions and efficiency in those and so on. So I think over a period of time, of course, clearly there are a lot of other digital payment instruments based on the fiat-based money system, monetary system, and the regulated space has evolved, and it has been there with us for a few decades now. Now, insofar as this acceleration of the digital trends and the way society is evolving, I think it is incumbent on all of us to question ourselves whether how this system will evolve, to meet the needs in the future. So I think from that perspective, I think cash as a universal payment mechanism needs to evolve in reflection of the ongoing trends. And CBDC is, of course, an attempt to see how cash can adapt to the digital world. So I think from that perspective, I think it is a continuation of that kind of a monetary system. Of course, there are alternatives which are being talked about. Kind of all the stable coins and crypto and all of that stuff. And one has to see how it evolves. But I think at this point, the gains which society has got from the monetary system we are currently in, I think are tremendous and are worth preserving. And in that sense, I think CBDC as a continuation of that is a natural evolution. So I think I will stop at that for this question. And I think we will have opportunity to go a little bit more on these specific points.
Sure. Thank you, Harish. John, what is your take about this?
Yeah, I mean, I agree completely with Harish. I mean, there's the technology evolves and the kind of currencies that we can produce and use evolves with it. But I think also, in addition to that, user needs evolve. We're in a digital world now. Like physical cash is useless to me when I'm buying something on Amazon.com or online. So I think the money has evolved, and the private sector. Commercial bank money, private money has evolved along with that. So when I go on Amazon, I'm typically using a credit or debit card. But perhaps I would prefer to use central bank money, which is not currently an option because the cash is sitting in my wallet kind of uselessly right now. In fact, it's embarrassing. I was at a restaurant in last week in San Francisco, and I didn't have any cash, and the way the bill was structured, I couldn't tip the poor waiter. I had to explain to him, I don't have a single dollar bill in my wallet because last time I used cash was many months ago. So I think that's part of the evolution too. It's pushed by the digitalization of the economy and user needs.
Thank you for this. So I would say that just to wrap up, sorry, your answer, this is a continuation of the system, and this more than a continuation, it could be also how the system is adapting to the digital world. That would be like a good way to wrap up. Thank you for this. So our second question is, the retail payments landscape has been dominated by a bank-based ecosystem in which commercial bank and central bank money work as settlement assets. How are CBDCs going to affect this bank-based ecosystem by allowing the public to directly access digital central bank money along with cash, which is the point of John in the last answer? John, you can go first. Thank you.
Sure. Yeah, I think this is something that central banks wring their hands about a lot when they're thinking about CBDC. Suppose they make a CBDC that's too attractive, and in that respect, some central banks are pondering the idea of paying interest on the CBDC, remunerating the CBDC, which to make it even more attractive, or for other applications which we might discuss later. But let's suppose you put the interest rate at a very attractive rate, there would be a risk that citizens, residents, users might decide, hey, this is a better place to park my funds rather than the commercial bank, and that could have an important impact on the commercial banks, the banking system's ability to raise funds, because retail deposit funds are among the most cost-effective funds that they have. So there could be important impacts on the overall economy if you stunt the ability of commercial banks to get their cheap funding and then provide loans. So that in that regard, central banks are very cognizant of that risk, and the ones that we've seen rolled out so far, for example, do not have interest rates attached to them, and they also have strict limits on how much you can hold. Particularly, the fear in some of the developing countries, I should think, is run risk, that you're creating in the CBDC the ultimate safe asset to run to, and at the click of a button, you can transfer all your funds out of your deposit account into a CBDC. So again, that's something that is feared for by many central banks who are designing CBDC.
Thank you, John. Harish.
Yeah, no, I agree with what John said, and the impact will of course depend on the design, the scale and pace of adoption. But also, I think one important point is also the timing would also matter. Timing in terms of timing during the business cycle. We are in a current particular part of the business cycle at this point, and also it depends on the timing of introduction in the country's economic development, and then development of the overall banking and payments landscape and so on. And the reason I make this point is, if central bank digital currencies are introduced, of course, depending on how fast the adoption is, and if you think about some corner situations like massive substitution of customer assets held in current accounts and savings accounts into CBDC, in that kind of a scenario, the cost of funds for banks will dramatically increase. And it could lead into either a curtailment of lending, or it could lead to increase in lending costs. And depending on the structure of the banking system and the structure of the money markets and capital markets in the country, there could be other ways of addressing it. Banks might be able to raise money from other sources. But in some other countries, like in the developing country context, for example, these markets might not be well developed, and they might not be, the coping mechanisms there might not exist, right? So I think it really matters on the stage of the economic development, the timing when it is introduced, the pace and scale of adoption. But one point to note here is that the evolution of the payment services has reflected the needs of the economy, right? So cash met the needs for a long time, then the checks evolved, some form of checks evolved, then they got translated now also into other forms of electronic payments. And banks had to develop payment services to meet that need, right? And they had to develop payment services. It was a business line. They had to have a particular business model around it. And now, when the situation changes, then the whole premise might need to be relooked at, right? In terms of whether the business model around payment services might need to be relooked at, and that has bearing on the way the banks make the revenue and the way the system works today. So I think that's the other point to note. Thank you.
One thing I'd add too is that some economists have kind of dismissively said, no problem, the central bank balance sheet balloons with all these CBDCs outstanding, they can just lend back to the banks. But that's a huge leap in terms of a typical central bank mandate. Typically, central banks will only lend out against the kind of top collateral, basically, usually government securities, sometimes something a little riskier, but not lending out on an uncollateralized basis to banks, and also puts them in a position where they're playing almost like kingmakers out there in determining, whether they should and how much they should, lend out to the commercial banks. So I don't think that's a valid solution.
That was a very, very interesting answer, Harish, and also your ad, John. I wonder if perhaps the topic here at the end is the CBDC. It's primarily designed to be a payment instrument. I mean, to serve as a mean of payment for the economy. I guess if the problem that we could see is that if it turns out to be also a store of value solution for the economy. So if the design choices and if the interest rate as the remuneration, as John mentioned, or the caps to the balance of CBDCs is too high, perhaps people will start resorting to CBDCs as a store of value. Is this something that perhaps central banks should be aiming at, to keep CBDC as a payment instrument and to avoid making it a store of value?
Well, I'll jump in on that one and say, yeah, I agree completely with what you just said. I think that should be the design aim. One of the mantras we would use at the IMF in our technical assistance and other advisory work, and even I continue with that now, is that everything is country specific. Maybe there's a country out there where maybe there is a shortage of good stores of value. Maybe there is a situation where a central bank could move into that space, but I would say in almost all cases, I would advise that they stick to the medium of exchange is what they're aiming to produce here, a central bank backed medium of exchange.
But just to add a little bit on that point, I think as an aspiration that I think is very, very clear. But in practical terms, I think delinking the kind of the store of value function and the payment mechanism function is very difficult. And if you say it is intended to be a means of payment for a large chunk of the society, their payments are made from their transaction accounts which they hold, their current accounts and savings accounts. So I think if you can't have current accounts and savings account and say the CBDC is a payment instrument, because it doesn't kind of fully connect, right? But if you're talking about CBDC to replace the role of cash currently, and then yes, but then if cash use is itself declining, then kind of where does this fit in? So I think as an aspiration, it is clear, but I think there are a lot of kind of practical implications one has to think about.
And of course,
That's
we
great.
do want to design a CBDC, so it is a good store of value in the sense that you don't want a CBDC that's maddeningly not being anchored to the unit of account in the country, and that's critical that it be be anchored to the unit of account, or in some cases you might say legal tender. But then that you can totally ignore the store of value function.
So devil is in the details as usual, right?
Mm-hmm.
So the next one, we're going with John first. In April 2020, China became the world's first major economy to pilot a central bank digital currency. It is a retail intermediated CBDC and is not based on DLT or blockchain or something like that. So from a technical perspective, is this what we should expect from most CBDCs rollouts in the near future? Retail, intermediated, non-DLT solution?
Well, I think first of all, intermediated is almost always the way to go. And in some of the papers that I've written at the IMF, we were musing over, that we have the so-called direct approach where this central bank issues and directly interfaces with users versus the intermediate approach where they delegate all the onboard and KYC and management of the call centers and all the grunt work of managing a payment system that would be delegated to intermediaries. And that makes so much sense for most countries because the central banks aren't well set up for that kind of operation. They have to massively ramp up operations and resources to handle that. So far, none of them have talked about going the direct route. And we tore our hair out trying to figure out, there's a country somewhere where, because we always like to say it's country specific and so on. Is there a country somewhere where that direct approach might make sense? And we were thinking of, maybe some very, very small country with a totally undeveloped financial system. So there's no intermediaries to delegate out to that, but I have yet to find that particular use case. So first part of the question, yes, and all will be intermediated. I will guess that. The second part of it is, would they be based on distributed ledger technology? And that's definitely not true, because we've seen all sorts of different flavors of technology platforms come into the fore. We have, like you say, China's got, it's not DLT, it's not, I'm not sure what it is actually. Sometimes it's called hybrid because some parts, one of the layers I think might be DLT, but I'm not sure. There's a lot we don't know about that. We do know that the Bahamas Sand Dollar is based on a DLT platform. So is the Eastern Caribbean Central Bank Dcash. That's also DLT. But then you have Jamaica. They're piloting something that's based on what they call a digital bearer instrument. It's unlike a distributed ledger system and unlike a centralized ledger system. It's something out there. And so I think you're going to see different types of rollouts. I mean, I'm kind of keen on the DLT platform prospect because it seems like there's more things you can do with it. You can you can layer in smart contracts and so on, and also you eliminate single point of failure risk by distributing the management of the ledger. And so just people who say, "My God, you're going to create a crypto asset like Bitcoin." Well, it's not quite the same because the DLT platforms that are being used are what they call private permissioned or consortium type of DLTs that are that only have a very limited number of parties involved in the validation and updating of ledgers. Typically, the same payment service providers that would be part of that delegation of intermediary services. So, I like to say that some people will say that a CBDC is all about DLT, and I would say absolutely not. It's different things work for different central banks.
Thank you, John. Harish.
Yes, no, I think if I understood your question correctly, there are three parts to it. You said retail, intermediated, and DLT. I think John picked on the intermediated and the DLT part. But I think the retail part, if you're meaning between retail versus wholesale, I think what we are seeing currently in terms of the ones which have gone live or which are in very large pilots are retail. But there's significant research and significant proof of concepts and pilots are also going on the wholesale side. So I don't think we should rule out any development of a wholesale version of CBDC, and I think that could continue to be relevant. And as regards DLT versus non-DLT, I think it is too early to call on that. I think there are a number of technological developments which are happening, and quite a bit of creativity and resources are being invested in this area. There are some advantages which John talked about, which DLT could bring, or at least help in doing it in a very elegant way. Many of those things like programmability, etc., could be achieved in traditional technologies, but from a design choice, I think DLT offers some advantages in implementing it that way. So I think it's too early to say, but also as pointed out in the chat window, I think even the Chinese one, the large-scale pilot, does have some DLT components, and I think somebody clarified in the chat on that. Thank you.
I'll just add to the wholesale story too. I think there's some really exciting things happening in the wholesale CBDC space. The BIS Innovation Hub has been leading a number of really interesting projects. I kind of group them into three categories. One being trying to improve the functioning of the domestic payment systems, and then they're also applying the wholesale CBDC to improving the efficiency and cost effectiveness of cross-border payments. And there's a third part of it, which is looking at using wholesale CBDC to improve the settlement and ledger running of securities capital markets applications. And there's some really anybody interested in wholesale CBDC should check out the BIS Innovation Hub website, because there's so many interesting things happening there. And also the wholesale CBDC could play a part in a retail CBDC effort. There's another variation we didn't mention, which is the IMF is rather keen on this idea, or was the synthetic CBDC, which is essentially a stable coin that's backed by central bank reserves. So one way you can achieve that is to allow the stable coin issuers to park their reserve funds in a central bank reserve account. But another way that's been considered, I think it's the company Solo is pushing this idea that you create a wholesale CBDC that tokenizes, in effect, central bank reserves, and you can basically allow those stablecoin issuers to hold this wholesale form of CBDC. So lots of good things happening there.
That's very interesting. I would wrap up with just two expressions that you used, which the answer to this question is country specific. I mean, it will depend a lot on which size or type of economy are we talking about? And also, as Harish mentioned, it's too early to say. I mean, we only have a couple or a handful of deployed or rolled out CBDCs, and we have a lot more to be deployed. So we're just starting to see how it will evolve. The next question has to do with the promises of CBDCs. So reasons for CBDC rollout hold a lot of promises for the people and the economy as a whole. What do you think will CBDCs accomplish, and what will fall off the radar of CBDCs? We can start with Harish.
Yes, no, I think what will it accomplish? I think it is difficult to again respond in concrete terms, because I think what it accomplish in the short term, medium term, and long term could all be very different. But at the minimum, I think what all this interest in central bank digital currencies will do is to raise the attention onto some of the long-standing issues on the payments market globally, right? In terms of some of the challenges related to access to payment accounts and payment services. There has been some challenges. Yesterday, the World Bank released a fintech report which showed some progress, but of course, clearly more work is needed. And the underlying reasons for that, I think, relate to a number of factors, in terms of cost of accessing, cost of providing, and then also the advantages and awareness about the benefits of using digital services. I think there are a lot of underlying reasons for that, both supply side and demand side effect factors. And I think by focusing on CBDCs and making it widely used, I think one will need to confront all those issues, and it'll basically shine a spotlight on that, which might have been, in some country context, might have been the responsibility of only the government. And central banks now becoming very active in the central bank digital currency issuance might need to also start becoming very actively involved, and also the broader set of stakeholders. So I think that is one point. The second, I think, is on competition. I think so far, the only way digital payment services can be offered there are a few options, right, like cards and e-money based services, and they have a business model around it. But with the introduction of CBDC, that game could be altered. There could be different ways in which now the payment services could be met. It could bring in new players into the game. It could basically create some kind of a benchmark which other players will then be forced to meet. So I think it could alter the competition landscape for the good or for the worse, depending on the design choices, right? And then I think maybe this is more an aspiration, but also I think the stated goals of many of the CBDC projects is that it'll make real-time payments more universal, make it available 24/7, make it more transparent, lower the cost, and then so on. So I think those are the end objectives with respect to CBDC, and it's an effort to make that happen. And CBDC is one of the reform initiatives related to that. There are, of course, other areas which need to be focused on, and I think at the minimum, it will shine the spotlight on the underlying reasons and improve the collective will to address that. Thank you.
Thank you, Harish. John.
Yeah, I think that Harish makes a lot of really great points, and I think it's true that the CBDC thought process it is shining the light on pain points in the payment system, and I think I'm hoping that it also kind of pushes central banks to look beyond CBDC, because when I'm thinking about CBDC advisory work that I'm doing, we like to pull everyone back to the top of the decision tree and say, okay, what are your pain points? What are you trying to solve with the CBDC? And and then after that, you look at all your options. It could be, in some cases, a central bank should be looking to improve its existing payment services, maybe introduce a fast payment service or beef up their settlement systems, and that might be a better way to go. Because what kind of worries me is that when I look at those, we've seen these 7 or so pilots and launches, and I would say that they're not taking off like wildfire. I call it the Field of Dreams effect, the movie Field of Dreams, where there was Kevin Costner. He builds this baseball field in the middle of nowhere, and then magically all these old-time baseball players show up. So it's the byline for that movie is build it and they will come. And we're not seeing in endless pilots gangbuster demand for these things. So, you've got to wonder whether maybe there's different ways of achieving those ends when you look at that. I mean, we see impressive numbers of wallet downloads in the Chinese pilot, but they also do a lot of things to kind of tickle that demand by, having all kinds of gimmicks and lotteries and that sort of thing. So I think that's an important part of the thought process that central banks should be going through, making sure that there are looking at all options, CBDC and others, in order to achieve the goals that they've set out. And that includes all the things like Harish mentioned, things like cost effectiveness of payments, access to central bank money, and financial inclusion. They're all important.
Thank you for this. I have to say that I was surprised because of your answers, because I was expecting just what John mentioned at the very end. I thought we were going to talk about financial inclusion, monetary sovereignty, efficiency of the payment system, but you went somewhere else that no one talks about a lot. I mean, that is very difficult to talk about. For instance, something that I would like to highlight about what Harish said, which I'll put it in my words. I think that the CBDC may get this level playing field for the payment system, so that the payment system starts evolving from a bank-centered payment ecosystem to something more broad, more democratic, let's call it like this, into other types of financial institutions or non-financial institutions entering the payment ecosystem. So I think this answer is really enlightening in the sense that it's not going like the usual path of a central banker, and that's really great. Thank you.
And you don't need a retail CBDC to achieve any of those things. I think opening up access to central bank reserve accounts to fintech companies, which the Bank of England has done with their, I think they call them omnibus accounts, and there's banks there's commercial banks, or more like fintech banks really, that are applying to the Fed for a master account, which would allow them to achieve similar ends. I mean, those could be the way to go. Just, like you say, increase competition by opening up the potential to issue a CBDC like payment instrument, but offered by the private sector.
I agree on that. Next question is going first to John, then to Harish. It is, from a retail payment supervision and oversight perspective, what should we look for when assessing the performance of a CBDC? And related to this, is this assessment dependent on the type of the economy where the CBDC is rolled out? And I'm sure that John is going to talk about the country-specific things, but let's do it.
I'm going to do that. That is right. Yeah. So in my advisory work, we have this decision tree that we go through. What I mentioned before, you start with that pain points and then the options. So now you're going down the CBDC branch of the tree. When the next step in that process we usually advocate is what we call a foundational assessment. So you want to determine, whether the pieces are in place to actually offer CBDC. Some of them are really basic, like if you're going to offer something that requires online connectivity, does everybody have access to a smartphone or feature phone and internet access? But also you're looking at things like, do you have the legal foundations? Maybe the central bank isn't even able to issue CBDC, may have to change some of its central banking laws, but also you have to have a solid regulatory framework in place, and that kind of has two branches to it. From the work I'm doing, there's the infamous PFMIs, the Principles for Financial Market Infrastructures, which the rules set up by the Committee for Payments and Market Infrastructures that payment service providers should follow all the prudential rules that they should follow. So you'd want to see in that country that because you're delegating all this payment system work to the private sector, you should have a solid PFMI-based regulatory system in place. That's part one. Part two, I know I get flack from this on Twitter and other places, but the central banks are obliged to follow the Financial Action Task Force, the FATF rules that regards to mitigating the AML, money laundering and terrorist finance and risk, tax evasion and all that good stuff. So you also want to have a robust regulatory system that makes sure that everyone is following those FATF regulations, and that can be a kind of a weak point for many. If it's full of holes, that's probably not a good starting point for a CBDC. So I think that regulatory framework with those two prongs is really critical in order to sort of go beyond that foundational stage to say, okay, now let's start designing a CBDC that will be attractive for users.
Thank you, John. Harish.
Yeah, so no, to add to what John said, I think the underlying aspiration and the policy objective for any payment service or payment system is that it's safe, reliable, and efficient. It promotes financial stability, helps improve the integrity of the financial system, and so all of those remain, right? So I think those will form the basis for any evaluation and any design choices which are made. And in this regard, the G7 came out with principles for retail CBDC, and I think they encapsulate this quite well. There is also some overarching principles espoused by the BIS, which again kind of articulate this quite cogently. So I think all of those remain relevant. I think from payment systems perspective, I think the CPMI's core principles from the financial market infrastructure, systemically important ones, remain relevant. But for the retail payment services, I think there are some variations across countries. But the fundamental basis is to promote safety, reliability, efficiency, and integrity. And efficiency, I'm using in a very general term because it could have elements related to speed. It could have elements related to cost. It could have elements related to inclusiveness and so on. So I'm using it very, very broadly. A few points to highlight, I think, would certainly be interoperability in the sense that CBDC has to fit into the existing payments landscape. One would not want CBDC to be a separate circuit, separate island, and the rest of the system continues as such. So it should get embedded into the payments landscape, and that would mean interoperability with different ways of different institutions which are involved in CBDC, but also between CBDC and other payment instruments as they exist in the economy. Then I think competition is another important element, and this point I think I'll build a little bit on this particular point. And data protection and privacy is extremely critical because in central bank digital currency, depending on the design, again, there is a possibility of the entire economic life of a person and society could become centralized. And how this gets used and the risks which come from that, I think are very, very important considerations. Of course, there are ways to address them very clearly. And then I think evaluating against that point of data protection privacy is very, very important. And the implications depend on the economy. And the reason why I make this point is in developing countries in particular, where the payments landscape is not that well developed, significant investments are required in expanding the penetration of digital payments. That means educating the market, raising awareness, and then kind of ensuring that the merchants and individuals have the means to make payments in terms of devices, in terms of all this QR code kind of development, relationships, the signing up merchants, do the due diligence on them, and all of that stuff. And whether these can be done by the central bank by itself, or if it has to involve the private sector, and what role they will play, and how will you compensate for the cost of investment required in building the ecosystem is an important consideration in developing countries at least, where the payments landscape might not be that well developed. So I think that is one illustration of how it could depend on the context of the country. So I will leave it at that, but just to reiterate that there are some principles which are already being put out by the official sector, and I think they remain relevant. The G7 principles, of course, were developed with the G7 countries in mind, but I think there are elements in that which are broadly applicable. But the relative emphasis and relative weight of particular principles will vary depending on the country context, but I think they are broadly applicable. Thank you.
Thank you, Harish. Thank you, John. It was a very interesting take on this question. We have 5 minutes and we have still 2 questions, at least before the Q&A. So the first of these last 2 questions is about CBDC's evolution. So we have come very far in the last 15 years, in which, for instance, in June 29th, 2007, we had the very first iPhone released to the market. It was 15 years ago. It was already long ago. And look where we are now with mobile phones and all the iPhones and everything that has started after this let's call it invention, or this new product. In your opinion, by the time it is, let's say 2037, 15 years from now, what will CBDCs look like, and at what stage will other payment instruments be across the world? Harish.
Okay, I was hoping that this question goes to John first. I think it's very difficult to respond to this, and I think you're leaving some mark for posterity, and anybody who makes predictions even 5 years ahead is opening themselves up to a lot of risk, right? So I think it's a very difficult question to answer, and even specifically related to iPhone, as you mentioned, nobody would have imagined 15 years back of the shape it is in currently. And a lot of things had to be developed as part of this evolution, including the entire business model around it, in terms of all this app economy and so on. So I think it's very difficult to really envisage, but I can perhaps point to an aspiration with respect to how CBDCs should look like, and I think it should become invisible, in the sense that one should not really be able to distinguish a CBDC as a payment instrument from other payment instruments. And even payment service as such, I think, should become invisible, that we don't have to have a separate step and a separate reflection on what payment instrument to use and so on. It has to become really embedded into the economic transactions. I think that's why I would leave it. And then, of course, the other point related to inclusion, that it is universal ability to make and receive payments, which are consistent with the legal framework and the economic needs. And this universal inclusion, I think, is a very, very critical aspiration. So let me leave it at that, and I really hope this aspiration kind of comes true. John, over to you.
Yeah, that's a tough question, isn't it? Because the pace of progress is accelerated, and so something that took 15 years before, it would take 5 years now, and who knows what technology might be available in 15 years from now. It's just mind-boggling to think. I mean, I think one of the things that I think about a lot is, in 15 years, the question is, what about quantum attacks, quantum hack attacks? And I think in terms of the digital economy, that's something that I think we have to start thinking about, to building out quantum resistant payment systems. So I think that might drive the advancement of quantum processes, might drive some of the technological things that are happening with the digital currency space. But like I said before, the field of dreams effect is always going to be here. So maybe the future doesn't hold well for a retail CBDC. I'm much more hopeful about wholesale CBDC and the role it can play in underpinning private sector means of payment. But I really agree completely with the need for that interoperability and sort of seamlessness of payment things. You shouldn't have to pause for a minute every time you think about paying for something, because you've got this multitude of choices with different permutations and combinations of features and so on. I'm hoping that in 15 years that would be a decision that one has to pause over.
That's very interesting. Perhaps the word is to make it universal and interoperable. I mean, that would be like what we expect. As Harish said, it's like our aspirational answer to this question. So the last one, it has to do with the development of the metaverse, the Generation Z, and their reliance and dependence on digitalization, on digital world. Will this mark the end of a cash era? And will the CBDC or other form of digital currency take over? Harish, we can go with you first again.
Right. No. See, I think I will use the word digital currency very carefully, because digital currency has some people define it to include things like Bitcoin and all of that stuff. So I will limit my answer to the CBDC point. I think the point on cash, I think, is a very, very tricky one. And as I said in the beginning, I think the point is always about whatever the payment instruments available in the economy, they need to reflect the needs of the economy and the needs of the society. So insofar as cash continues to be demanded by society, by some segments of the society, I think cash should not be taken away. But as the user habits and user behaviors change, there could be a natural decline in the usage of cash. And at that point, of course, then one talks about digital payments and digital mechanisms becoming universal, and cash usage drops to zero. But this transition should be nudged along, maybe, but should not be forced, because I think there are important roles which cash currently provides in the economy, and there are certain customer segments would be very significantly impacted if cash usage is stopped for legitimate use. I'm not talking about any money laundering and so on. I'm saying for legitimate use, there are significant segments of society who are still dependent, and it will vary by country. There are some countries which are very far advanced on digital adoption, like the Nordic countries and a few other developed economies. And even among some developed economies, I think cash usage is significant. People talk about Japan and Germany, where cash usage is significant. And then developing economies where digital payments are barely touched, like 5-10% of transactions. I think there's a very long road ahead to get to that point. And then also in metaverse, who knows? What is needed? And maybe a metaverse would be a kind of a very idealistic world where there's no payment required. It's free, everybody, so there's no need for a payment in a metaverse. So who knows, right? So I think one has to see how the needs which evolve in the metaverse. Thank you.
John.
Yeah, I'm going to agree with all the points that Harish made, and the importance of retaining cash as a payment instrument. I mean, one of my common focuses is on the resilience of the payment system, and cash is a very, very resilient form of payment. I mean, it has a downside that you can't use it online, although there's these things called smart bank notes that actually do bridge the world of the online and offline commerce world. So that's worth considering. But in terms of resilience, what you do when you're in Haiti, for instance, and Katrina's just knocked out all of your electronic infrastructure for a month, cash is going to be ruling in that scenario. And one of the scenarios I like to point to is there was something called the Carrington event back in the mid 1800s. It was a massive solar flare that knocked out all the Morse code infrastructure, and if that happened today, some speculate that that kind of solar flare event would basically fry all our iPhones and smartphones and so on, be rendered useless. Any electronic gear would be like a brick. Even generating capacity could be knocked out for years or months. But I think in that regard, it's useful to have cash around as a backup plan.
That's great. Thank you, John and Harish. I have read some of the Q&As that we have received. We have just 3 minutes or less to answer them. So I will give them like the very straight questions. So the first one is, could the stablecoin ecosystem disrupt the CBDC as a payment system, or is it the other way around?
Well, I mean, I'll take a crack at that one. I mean, I think they can potentially coexist. I mean, when we talk about the synthetic stablecoin, which might be, I mean, synthetic CBDC, which may be way to go. That's the ultimate marriage of the two concepts. And I think there's a lot of stablecoin issuers that would prefer to be a synthetic CBDC, and it's just that door's not open. To have a US dollar synthetic CBDC, you're going to have access to a Fed master account, and so far they're not allowing that to anybody but depository institutions. So personally, I think if we're looking ahead that 5 or 15 years, that might be something that we might look forward to, that there will be kind of a seamless, could even be coexistence of directly issued CBDC and synthetic CBDC that would be perfectly interoperable and fungible.
Great. Harish?
Yes, so I think stablecoins evolved to address some gaps in the payments landscape, and also to address the need for some kind of a bridge currency for the entire DeFi ecosystem. So I think so that is the trajectory in which the stablecoins have developed and are evolving. And I think there are clear risks for society and then for the monetary system. if there's a very wide usage of stable coins, at least in a way that is not fully well regulated and the risks are understood and mitigated. So I think in that sense, I think CBDC can get positioned as an alternate, and an alternate path of achieving meeting the needs, but without necessarily all the risks, right? So I think in that sense, one could call as these are parallel tracks at this point. There could be some convergence at some point, and one could become more dominant than the other depending on the choices made and what society demands.
Thank you, Harish. Thank you, John. I'll have another one. Is there any issue with G7 CBDCs becoming store of value solutions in monetary chaotic emerging markets?
Well, I think it's a risk, and I think it's a risk that the major the international financial institutions like the IMF, World Bank, BIS, that concerns them. In fact, on the do no harm, I think one of those G7 or BIS key criteria is do no harm, and that would be part of it. That the G7 countries are very cognizant of the fact that they've offered up this CBDC that can be is cross-border enabled, that there's that risk they're going to create what they call dollarization or currency substitution risk. So it's something that they're definitely thinking about. I think one of the questions we thought we might be talking about is whether there's going to be why is it that emerging market countries are so far ahead of the G7s and G20s in terms of CBDC developments. And I think that's one of the reasons that the G7, G20s are very cognizant of the fact that they have to be very careful in how they design their CBDC so that they follow that do no harm principle.
Thank you, John. Harish.
Yes, no, I think see there is a concern on that, and I think this has been acknowledged by the policymakers, and I think the G7 principles also acknowledges this, and there are some considerations which are articulated, and I think that is also potentially the reason why many central banks have really increased the research on this topic, because sometimes the need for introducing a CBDC might be a response to some of the geopolitical developments, might be a response to what is happening in other countries, to ensure that they are able to control their monetary sovereignty. So I think there are interconnections, but at the same time, the policymakers have considered this risk, and they are very, very cognizant of this, and the principles all they articulate that.
Thank you, Harish. I'll have the last one, and it's very straight question, and it's related to decentralized finance, which is a very hot topic right now. Do you expect CBDCs to contribute or to curtail decentralized finance?
Well, DeFi right now runs on stablecoin rails, right? It relies on stablecoins like Tether and USDC, and we all if anybody reading the fintech press knows that there's always these doubts expressed about the solidity of the reserves that back those and so on. So to me, I think CBDC could potentially be part of a DeFi system. It could replace the role of like the Tethers and the USDCs in the infrastructures of the DeFi world. But I mean that can also be achieved through the synthetic CBDC approach. So which would effectively make the Tethers and the USDCs that would become effectively CBDC-like. So I think there's possibly an overlap between the two.
Thank you, John. Harish, just to close.
Right. So I think the DeFi part has two elements to it. Right? One, there's a wholesale element and there's a retail element. On the wholesale side, of course, stablecoins are quite dominant, and CBDC could offer an alternative, or it could at least address some of the concerns which some have related to the stablecoin arrangements. But on the retail side, I think there are real issues. If you want to position CBDC as a mechanism to participate in the DeFi, because then the values required are much higher. The holdings required will be much higher. The transaction size will be higher. So I think how that fits in, I think one has to see, right? But on the wholesale side, I do see the stablecoin and CBDC in some sense trying to evaluate which one is a better fit. But on the retail side of DeFi, I think there are some real concerns. If you want to position CBDC, because then the design, some of the design elements being discussed become very different.
Great. John, Harish, thank you very much. This has been a very interesting, enlightening conversation. So I would like to close the CBDC broadcast number 6. And I would like to thank you, our speakers. If the public has any further questions, you can send us by email, and we'll make sure that John and Harish get them, and perhaps to have an answer from them. So I would like to thank you all and remind you that next month we'll have CBDC broadcast number 7. We also have the new SupTech broadcast number 1, and we also have the FMI Financial Market Infrastructure broadcast next month. So thank you very much, everyone, for joining us. Thank you once again, Harish and John, and to all of you, have a nice day.
Thank you, and bye.